Most traders believe success comes from doing more. More trades, more indicators, more analysis, more screen time. But one of the greatest traders in history, Jesse Livermore, understood something very different. He understood that patience creates profits. And that is exactly what I want to talk about in this video. Jesse Livermore's secret to mastering trading patience. Because this lesson is still one of the most powerful psychological truths in trading today. Most traders are not losing because they lack strategies. They are losing because they cannot wait. They cannot stay calm. They cannot control emotional urgency. And because of this, they constantly force trades that should never happen. If you stay with me until the end of this video, you will understand why patience is one of the biggest psychological advantages in trading, how Jesse Livermore used patience to build enormous success, and how you can slowly train your own mind to become calmer and more disciplined in the market. And if you want to continue building a strong trading mindset, consider subscribing to Bull Mindset. This channel is focused on trading psychology, discipline, patience, and long-term consistency. Now let us begin with one of Jesse Livermore's most famous ideas. He once said that big money was never made through constant trading. Big money was made through sitting and waiting. That statement sounds simple, but emotionally, it is extremely difficult. Because the human brain constantly wants action. The brain wants excitement, movement, activity, and this becomes one of the biggest psychological traps in trading. Most traders feel emotional pressure to always do something, to always be in the market, to always catch every move. But Jesse Livermore understood something deeper. The market rewards patience far more than emotional activity. Now let us go deeper into psychology. Why is patience so difficult? Because emotionally, waiting feels uncomfortable. When traders sit and watch the market, boredom appears. Fear of missing out appears. Emotional urgency appears. The brain starts creating pressure. What if I miss the move? What if the market takes off without me? And suddenly, traders enter bad trades emotionally. Not because the setup is strong, but because emotions became stronger than discipline. Now let us talk about another important truth. Patience is not passive weakness. Patience is emotional control. This is extremely important to understand. Most emotional traders think patience means doing nothing, but professional traders understand patience is an active psychological skill. It requires discipline, self-control, emotional awareness, and emotional maturity. Now let us move into real trading examples. Imagine a trader watching the market during a slow session. Nothing clear is happening. No high-quality setup exists, but emotionally, boredom starts growing. The trader begins forcing trades, small random entries, low-quality setups, unnecessary risk. At the end of the day, emotional impatience created losses. Now imagine another trader in the same market. They also feel boredom, but they stay patient. They wait calmly. They accept that no trade is sometimes the best trade. This emotional discipline protects their capital. This is the difference between emotional trading and professional trading. Now let us consider another situation. A trader sees a strong market move happening quickly. Fear of missing out appears immediately. Emotionally, they chase the trade late. The market reverses. Now frustration appears. Now imagine a disciplined trader. They see the same movement, but they stay calm. If the opportunity is missed, they accept it emotionally. Because they understand something powerful. There will always be another opportunity. This mindset creates emotional stability. Now let us talk about another important lesson from Jesse Livermore. He understood that emotional overactivity destroys traders. Many traders believe more trading creates more profits, but emotionally, more trading often creates more mistakes, more impulsive behavior, more emotional exhaustion, more frustration. Professional traders trade selectively. They wait carefully. They preserve emotional energy. Now let us go deeper into why patience creates better decisions. When traders become impatient, emotions narrow thinking. The brain starts focusing only on immediate action. This reduces clarity, reduces discipline, reduces objectivity. But patience slows the mind down. Patience creates emotional space. And emotional space creates better decision-making. Now let us talk about another important truth. The market does not reward emotional urgency. The market rewards disciplined execution. This is difficult for many traders to accept emotionally, because humans naturally want quick results, quick profits, fast success. But Jesse Livermore understood something powerful. Long-term success requires emotional calmness. Now let us talk about emotional timing. Many traders enter too early because of impatience, or too late because of fear of missing out. But patient traders wait for confirmation calmly. They allow the market to come to them. This patience improves both entries and emotional stability. If this video is helping you understand trading psychology more deeply, consider subscribing to Bull Mindset, because mindset is what separates emotional traders from disciplined traders. Now let us move into another important concept. Patience protects traders from emotional mistakes. This is extremely important. Most trading mistakes happen during emotional urgency, overtrading, revenge trading, chasing trades, increasing risk emotionally. All of these behaviors are connected to impatience. Now let us talk about boredom. Boredom is one of the most dangerous emotional states in trading because boredom creates the desire for stimulation, and emotional traders often confuse activity with productivity. But professional traders understand something important. Being active does not always mean being profitable. Sometimes the smartest decision is waiting. Now let us talk about confidence. Patient traders develop stronger confidence over time. Why? Because patience creates better decision-making. Better decision-making creates more consistency, and consistency creates stable confidence. Emotional traders experience unstable confidence. One win makes them overconfident. One loss destroys confidence completely. But disciplined patience creates emotional balance. Now let us talk about another important truth. Patience is deeply connected to risk management. Impatient traders often take unnecessary risk because emotions want fast results. But patient traders think long-term. They protect capital carefully. They wait for quality opportunities. This long-term mindset creates survival. Now let us move into another psychological lesson from Jesse Livermore. He understood that emotional self-control matters more than prediction. This is powerful. Many traders obsess over predicting every market move, but professional traders focus more on controlling behavior, because even a great strategy fails if emotions destroy execution. Now let us talk about self-awareness. Patience starts with awareness. You must notice emotional urgency before it controls decisions. Notice boredom. Notice fear of missing out. Notice frustration. Because awareness creates emotional control. Most emotional traders react automatically. Professional traders observe themselves constantly. Now let us talk about routines. Structured routines help strengthen patience. When traders follow routines consistently, emotional randomness decreases. Stable routines create stable behavior. Many profitable traders review markets calmly, wait calmly, journal calmly. This structure strengthens discipline. Now let us move into mental frameworks that help develop patience. The first framework is quality over quantity. More trades do not mean more profits. The second framework is process over excitement. Focus on disciplined execution instead of emotional stimulation. The third framework is long-term thinking. Judge yourself over months and years, not individual trades. The fourth framework is emotional neutrality. Stay balanced emotionally during both waiting periods and active trades. Now let us talk about practical exercises. One powerful exercise is intentional waiting. Spend time observing markets without entering trades immediately. This strengthens emotional control. Another exercise is journaling emotional triggers. Write down moments where impatience appeared. Write down moments where fear of missing out appeared. This builds awareness. Another helpful practice is reducing screen addiction. Many traders stare at charts constantly and emotionally force activity. Stepping away occasionally protects emotional balance. Another exercise is creating strict entry rules. This prevents emotional impulsive trades. Another important exercise is practicing calm breathing before entries. This slows emotional urgency. Now let us go even deeper. Most profitable traders eventually become calmer people psychologically. They become less reactive, less impulsive, more patient, more emotionally stable. This emotional maturity changes trading completely. Now let us talk about emotional recovery. Impatient traders often carry frustration into the next trade. But patient traders reset emotionally after mistakes. They slow down, reflect, recover mentally. This emotional recovery protects long-term consistency. Now let us talk about another important truth. Patience does not mean weakness. Patience is strength under emotional pressure. Anyone can trade emotionally, but very few people can stay calm while waiting. Very few people can resist impulsive behavior consistently. This is why patience becomes such a powerful advantage in trading. Now let us move toward the final message. Jesse Livermore understood something timeless. The market rewards patience far more than emotional activity. And most traders fail not because they lack intelligence, but because they lack emotional control. They cannot wait calmly. They cannot resist emotional urgency. They cannot stay disciplined during boredom. But traders who master patience slowly become stronger psychologically, more disciplined, more focused, more emotionally stable. Let me leave you with one final thought. The market will always create emotional temptation. The temptation to chase, to overtrade, to force opportunities. But the traders who succeed long-term are the traders who learned how to wait calmly under pressure. They became patient thinkers, patient decision-makers, patient risk managers. And if you continue strengthening patience, your decisions improve. If your decisions improve, your consistency improves. And if your consistency improves, profitability becomes possible. And if you want to continue building that mindset, subscribe to Bull Mindset. I will see you in the next video. Thanks for watching.